are the top 3 things or processes to focus on as a scale-up establishing both a strategic RevOps and FP&A function?
Paul, do you want to do that first? Then I have more time to think.
Sure. So first is making sure there's a clear budgeting and forecasting process. I think that's the number one thing. There may have been something before, but it's codifying it. Make sure you're having those conversations. With that is the hiring plan. Make sure you really kind of codified that and how that ties into your financial plan. So I think that's the first area. I think the next 2 areas really to processes for FP&A is one around investments. Because investments can come throughout the year. Yes, you have your budgeting process, but often you get a lot more your P&L, your balance sheet. You're not always making all those investment decisions. So having a formal process of how do you decide in mid-year if a great investment opportunity comes to do it or not if it's not in the budget. So I think those are 2 things you need. And then beyond that, I think FP&A then needs to put in a process around the reporting, the cadence for the meetings. How do you disseminate everything? How do you make sure the company understands what's important and that the financial and operational come together? Because finance are lagging indicators. They're not leading indicators. Important it is to have a budget, to have all the investment. If you're not bringing the operational insight into what FP&A is doing and looking at those metrics as well, you're selling yourself short, because that's where the warning signals come. They don't come from what was my net income at the end of the month or my revenue. That's too late.
Yeah. I would add to that from a revenue operations perspective. Kind of think of yourself as a project manager for achieving the revenue target. Kind of think about it like that. And then really, what are all the things that need to happen? Both on hey, we have this process already established and kind of that's running, but also what are the augmentations? What are the initiatives? What are the things on top that we need to achieve in order to hit this very ambitious assumptions tab that finance has somewhere in the budget of like, hey, the ACV is going to go up by 10% in July and conversion rate going to double kind of, later down the year. Kind of what is it actually that you from a business perspective, from a go-to-market perspective, going to do in order to achieve those metric improvements, right? And then number 2, and I don't have 3, number 2 really is have like a quarterly business review cadence in place. And that doesn't need to be overblown, but you want to look back a little bit. You want to force yourself and the organization to learn. And then you want to use that insight to potentially adjust how you're going to hit the overall revenue number, right? And that adjustment doesn't always need to filter through finance and the budget in the end. I think we sometimes call it the go-to-market forecasting exercise to say like, okay, we know we need to hit this target. We know we wanted to increase our conversion rates. We tried, it didn't work out. We need to find money somewhere else. And we need to kind of do something else instead, right? And this really comes from this learning cycle that you're going through when you're running those QBRs and then using those insights in order to improve going forward.